Hey everyone, and welcome. Today we're jumping into something really special in the investing world. We're going to be looking at a handful of companies that have been paying their shareholders consistently for more than 100 years. I mean, think about that. A legacy of payouts that has survived everything from world wars to market crashes to the dot-com bubble. It's pretty incredible.
So, have you ever looked at the market with all its ups and downs and just wished for something stable? Something you could count on? Well, you're definitely not alone. Finding those truly reliable investments that can ride out any economic storm is, let's be honest, the holy grail for a lot of people. But what if I told you that there are companies out there that have been those beacons of stability for generations?
That's exactly what we're talking about today. We're going to meet a very rare group of what you might call financial lighthouses. These are businesses that have proven their strength, their resilience, and their commitment to giving back to their investors, not just for a few years or even a few decades, but for over 100 years. It's a track record that just speaks for itself.
Okay, so here's our game plan. First up, we'll meet these 5 dividend centurions one by one. Then, we're going to put them side by side to see how they stack up. And finally, we'll wrap it all up with the key lessons you can take away for your own strategy. Sound good? Let's do it.
All right, let's meet our 5 companies. Now, you're going to see they come from completely different corners of the economy, but they all share that one unbelievable trait: a long legacy of unwavering payouts to their shareholders.
First on our list is a real titan from up north, the Bank of Nova Scotia, which you'll see listed as BNS. Now, this bank is a cornerstone of Canada's financial system, which is famously stable. And a big reason for that is the market is highly regulated and dominated by just a handful of major players. So these banks operate with a kind of built-in stability that you just don't see in many other places.
And get a load of this number: 192 years. That is how long BNS has paid dividends to its shareholders without a single miss. That streak started before the telephone was even invented. I mean, that's just a mind-boggling testament to financial discipline and consistency.
So this slide really pulls it all together. Being one of Canada's big 5 in that protected market gives it a massive advantage. And that solid dividend yield, sitting around 4.9%, well, that's not just some random number. It's a payout that's built on a foundation of nearly 2 centuries of trust, conservative management, and proven stability. All right, next up is a name I'm sure you recognize: Chevron. It's a global energy powerhouse for sure, but in the world of dividends, it holds a special, kind of elite status. You see, Chevron isn't just paying dividends, it's been consistently increasing them year after year after year.
And that brings us to this really important term: Dividend Aristocrat. It's a special title for companies in the S&P 500 that have raised their dividend for at least 25 years in a row. Well, Chevron has just smashed that milestone with an incredible 37-year streak of increases. You combine that with a top-tier AA credit rating, which is like getting a straight A report card for your finances, and you get a really clear picture of just how strong this company is.
Okay, our third company, UGI Corporation, is a really fascinating piece of American history. It was founded way back in 1882, and it was actually the very first utility holding company in the entire United States. Talk about a long track record.
You can really see how deep the roots go here. UGI didn't waste any time at all. It started paying dividends to its shareholders just 3 years after it was founded. And it's not just paying them, it's been increasing them for 38 straight years now. Its business is this really interesting mix of regulated utilities and propane distribution, which gives it a unique blend of stability on one side and some growth potential on the other.
Our fourth centurion is a company whose products I would bet are in your kitchen right this very second: General Mills. We're talking Cheerios, Betty Crocker, Haagen-Dazs. Their brands are absolute household names. And it turns out their dividend history is just as reliable.
This company is what you'd call a classic defensive stock. Why? Because people need to eat, no matter what the economy is doing, right? So its sales tend to be pretty stable. The proof is in the pudding: an uninterrupted dividend streak all the way back to 1898. Now, that 5.2% yield is currently the highest on our list, which is really attractive. But it's also important to point out the challenge here. The company has to keep adapting as we all shift towards healthier food options. So it's a bit of a trade-off: a really high yield from a steady giant that's also navigating a changing world.
And to round out our list, we have Stanley Black & Decker, a true industrial powerhouse. I mean, since 1843, this is the company that's been making the iconic tools. We're talking DeWalt, Craftsman, Stanley, the tools that have literally built our world.
And here we see another really compelling number, a dividend yield right around 5.0%. That income is coming from a company with over 180 years of history behind it. Now, its business is a bit more cyclical, which just means its success tends to rise and fall with the broader economy. Think about the housing market and construction. But its incredibly long history proves it knows how to navigate those ups and downs and keep rewarding its investors through it all.
All right, so we've met the whole crew. Now for the fun part. Let's put them all in the ring, side by side, and really see how their unique strengths and weaknesses compare. This is where we see the bigger picture.
This table gives us a fantastic snapshot. The first thing that jumps out is the diversity, right? We have financials, energy, utilities, consumer staples, and industrials. You can see how General Mills offers the highest current income, but a company like Chevron brings the strongest dividend growth to the table. And then you have B&S, which is just all about that pure, unmatched stability. So you can see how each one could play a really different role in a portfolio.
And here's a quick visual look at those yield differences. You can see General Mills right there at the top, but it's followed very closely by Stanley Black & Decker and Bank of Nova Scotia. While all 5 of these companies offer really impressive yields, all of them are north of 4%, this chart just makes it super clear who the current income leaders are.
Okay, so what does this all mean for you? I mean, looking at these old-school companies isn't just a history lesson. It's really about understanding the core principles of how to build a durable portfolio that can generate income for the long haul.
So what can we learn from these century-old survivors? Well, here are 4 key takeaways. First, think about balance. You might pair the bedrock stability of a company like B&S with the dividend growth of a company like Chevron. Second, diversify. It's no accident our list spans 5 totally different sectors of the economy. Third, think about how you invest. Using a strategy like dollar-cost averaging can help manage your risk. And finally, remember that even these giants need to be monitored. Their industries are always changing, and you have to keep an eye on things.
At the end of the day, if you only take one single thing away from this whole explainer, let it be this. A high yield is always tempting, right? But a company's proven ability to pay that dividend through thick and thin for over 100 years, that is the ultimate sign of quality and resilience. That long-term track record is where true confidence comes from.
And that really leads us to the final question, one for you to think about as you consider your own financial goals. In your own portfolio, what's more important? Is it the immediate gratification of today's highest yield, or is it the deep, proven reliability that comes from a century of trust? It's a really crucial question for any long-term investor. Thanks so much for joining us.